Well, in the last 1 hour of the trading session, seems like that some bit of a Friday cheer is coming back on the markets, but can't talk about it much because for now, Nifty 50 as well as Nifty Bank, they both are under pressure. Nifty has declined almost 100 odd points, while Nifty Bank at one point in time it was actually down almost 600 points. Slight recovery from those lower levels, but still holding on to the cuts of 422 odd points as we speak. But yes, a lot of stock movers in trade, and today, of course, Axis Bank is one of the spoilers from the Nifty 50 pack, but within financials, it's Shriram Finance, Kotak Bank. These stocks are reeling under pressure. But on the flip side, it's Wipro that is throughout the day has been holding on that top spot of the Nifty 50 gainers. Bajaj Finance, Tata Steel, ONGC, these stocks are holding up well. And that's actually interesting to see that how Bajaj Finance, all in all, in the last half an hour or so, is trying to catch a bit of a momentum. But at breadth of the market, yes, of course, that's skewed towards the number of declines that is inching higher. But yes, a lot of these stock movers on the back of the earnings is what we are seeing today. Metals as a pack is doing very well. Like we highlighted, that Indian Hotels did come out with a good set of earnings. It's almost a 2% jump there. And select real estate counters continue to do well in the markets right now. But yes, Snehi, I believe that for now, for today at least, the earnings seems to be digested. But today evening as well as tomorrow, that's going to be really interesting.
You know, Shrishti, what's interesting is today evening and tomorrow from the Nifty group of stocks, we have 4 companies that are going to be coming out with their earnings, and they make up 32% of the weightage on the Nifty. So just today and tomorrow, and in fact, of course, the earnings reaction of the earnings we see tomorrow will be seen on Monday. So that is also going to be very key to watch out for. But like Shrishti was mentioning, right? The earnings reaction digested maybe by the street, but we have some brokerage views that have come in that are pulling some stocks lower. Case in point being Axis Bank, wherein we've seen a downgrade in the rating coming in from JP Morgan as well as Nuvama, and they've gone ahead and slashed their target price by quite significant amounts as well. A lot of other target cuts have been coming in by brokerages across the board on Axis Bank because very weak quarter is what we've seen on Axis Bank. So that's a stock that is not doing very well at all. On the flip side, at least in the earlier first 30 minutes or so of trade, what was helping Nifty stay afloat was the good set of numbers that we saw from Wipro, at least better than street estimates on some fronts and much better than the overall IT earnings season that we've seen so far. So at least that was going on for the markets, but that's not the case anymore, and that stock has taken a little bit of a hit. The third stock that's in focus today on the back of brokerage action is HDFC AMC on the back of a Nuvama note coming in, and in fact multiple notes coming in. Brokerages are quite a beat on the stock post its earnings for Q1. So these are some of the stocks that are in focus. Other than that, from the Nifty group of stocks, you still have Wipro, Bajaj Finance that are holding on to some shade of green, followed by Tata Steel, ONGC, Nestle. But on the flip side, along with Axis Bank, you have Shriram Finance, BEL, Bharti Airtel and Kotak Bank, along with an HDFC Life that are tanking in the market today. But let's understand this and much more, and what we can expect to see from the sessions ahead in the near term. We have Mr. Dilip Bhatt, founder at Pedigree Advisory, joining us on the show. And Dilip, hi, good afternoon. Good to be chatting with you today. Give us a sense of the earnings impact that we have seen and how the market is overall reeling under pressure. It's been almost a week and a half of earnings so far. Do you expect this trajectory to improve maybe for the remainder of the earnings season?
Good afternoon. I think so far the number of results from the Nifty stable, I think that there will be very few. And as what you all very rightly said, that maybe today and tomorrow you will have some very big heavyweights coming out with the results also. But the broader trend, as what I can see, is that the results appear to be quite muted. In fact, they have been below the expectation on all the parameters. Whether you take tech in terms of the volume and in terms of the visibility, whether you take the banking in terms of the NIMs, in terms of the NI growth, the credit growth. And I think overall, more important is the management commentary of some of these companies have not been all that great as to inspire confidence that immediately in second quarter and third quarter will be something to look forward for. I don't think that is what the takeaway is. So I think that also is playing out in the markets. And as what I've always been maintaining, that there are too many contradictory signals in the as far as the economic parameters are concerned. And just to take one example, we just heard what the Automobile Association said, that this June quarter will possibly be the lowest in terms of the quarterly sales. Now, without any doubt, the automobiles has a phenomenal multiplier impact in the economy, across the sectors, which I always consider automobiles as one of the benchmark to measure the kind of growth that one can expect in the economy. So this also is not in favor of the markets. So I would say that overall, yes, markets is still begging, looking for a direction, caught in the crossfire of trading in an over expensive zone and supported by the Indian liquidity. But the unstinted support of the FIs is simply missing. So all in all, I think markets possibly can go sideways without any great movement, and possibly we'll have to spend some time. Downside, I don't see any great things to happen. So I think markets may stagnate, may consolidate around these levels, unless until one or two events can just suddenly give a big movement here and there, but that also will be temporary. So I think markets still are not getting the tailwind which is requiring from this quarterly results so far, and unlikely to do so. That is what it looks like, because I think based on these numbers, you'll see that the Nifty EPS growth, which was around 11-12%, which broadly the EPS growth which people were talking about, I think that also will come under scrutiny.
In fact, the disappointment actually came by, and that unfortunately came by from Axis Bank. They reported a weak set of numbers for the first quarter. Both the profit as well as the NII has come in lower than what the analysts were penciling in. Moreover, the asset quality also deteriorated for the private lender. In fact, Varun is here to try and analyze what the street has made of the numbers. The stock, of course, has fallen a good 5%. But what are brokerages now saying about how Q1 performance for Axis was, and whether or not they're already revising their EPS estimates going forward downwards or not?
Well, so it has been a weak quarter for Axis Bank, wherein the overall gross NPAs have increased from 1.28% to 1.78%, 57%, and also there has been an increase in overall slippages and provision. Now the company says that there was a technical adjustment because of which the overall asset quality has deteriorated, and also the provision and slippages have increased, and that has led to the overall profitability going down by around 3.8%, and also the names declining. And after that, you have several brokerage houses who have actually cut their price target on Axis Bank. For the likes of Morgan Stanley, CLSA, JP Morgan, these are some of the brokerage houses who have actually cut their price target on Axis Bank. Nomura has also cut their price target on Axis Bank, and many of the brokerages have actually gone ahead and cut their overall price estimate for FY26 and FY27. Like Antique, they have a buy call with a price target of 1300. They say that the overall results of the companies were weak, and they expect the company to deliver ROA of around 1.5 to 1.7 going ahead in FY26-27, and ROE of around 13 to 15%, and they have cut their earnings estimate by around 8 to 4% for FY26 and 27. Also, Motilal Oswal, they have a neutral call price target of 1250. They have cut their earnings estimate by 8.6 to 5.7 for FY26 and 27, factoring the overall higher credit cost and also the margin pressure which the company is facing. Also, they say that going ahead, the NPS might increase by 29 basis point to 12 basis point on a quarter-on-quarter basis going ahead. So that's a risk for the company. And also, Nuama, they have cut their price target, and also they have downgraded the stock to hold because of high volatility in the asset quality and growth, and they have cut their EPS estimate by around 5 to 6% for FY26 and 27. So results were weak, and also brokerage houses have cut their price target and also the earnings estimate going ahead.
Right, that's that on Axis Bank. Dilip, want you to analyze Axis Bank's numbers for us, because clearly it doesn't seem like it's a banking sector issue. It's a one-off for Axis Bank. But does that really sort of hunker down expectations on what we might hear over the weekend from ICICI Bank or HDFC Bank by any chance?
So I did heard, and I did see the fact that they definitely spoke about some technical matters because of which some parameters have gone haywire. But I would say more than that, I would look at something like what's happening to the NIM. I would say I would see what's happening to the credit growth. I think they've all been very muted. And I don't think that the management did, the management committee was anything great in terms of inspiring confidence. So I would say that my own sense would be that they would still require something more to do and to give some better visibility, which is missing totally. And I think that is what I think is generic across a lot of banks and a lot of companies and across a lot of sectors. So I would wait and watch for a while in Axis. I don't think that Axis Bank deserves an investment buy from the current levels.
Right, so that's the take coming in on Axis Bank. Even the management commentary is not giving that much of a confidence, and that's visible on the stock price as well. No substantial recovery from the day's lowest point. But with this, viewers, let's also welcome on board our charters for the show today. We are being joined by Saumil Mehta as well as Winner Rajani is also with us on the show. A very good afternoon, gentlemen, and thank you so much for your time. But Winner, firstly, help us with your take on the benchmark indices, especially that Nifty 50 breaking the number of 25,000. What does it really mean? Do you believe that there's a change in trend overall, or Nifty from these levels can actually make an attempt to surpass those levels?
Yeah, good afternoon and thanks for having me on the show. So definitely weakness is there. Nifty has confirmed the lower top, lower bottom formation also. And if I were to look at the resistance, the 25,255, which happens to be the recent swing high, that is a strong resistance now. And unless that is taken out, we should remain cautious. But today's low is around the 50 days exponential average, which is currently placed at 24,930. So Nifty has given respect to that level and trying to take support there. So any level below 50 days EMA, which is placed at 24,930, any close below that will further ignite the sellers and selling pressure will emerge again. So definitely weakness there, and technically one should remain cautious unless 25,255 is taken out. On the downside, there is a strong base around 24,500 to 24,600 where we saw in the month of June Nifty formed a strong base. So 24,600 to 500 range is a very strong support, and result season is going on. It might happen that some stocks will still perform even if Nifty goes down. So as of now, benchmark is looking weak, definitely. And 25,255 should be the stop loss in existing short positions. Until that is surpassed, one should remain cautious.
Remain cautious is the call coming in. Samil, what's your take on the entire metal space? Because barring the entire market, you only have metal and realty that are trying to, just eke out a little bit of a gain amid a largely consolidating market. And especially some names from the metal pack like NMDC, SAIL, Tata Steel, gains anywhere between 1 and 3% is what we're seeing on these counters. Give us a chart check on NMDC, SAIL and Tata Steel.
Let's start with Tata Steel. Overall, very mixed bag. JSW Steel is not looking good, that good. It's looking a little range bound. But Tata Steel overall has taken support at 20 and 40 daily moving average, has taken the previous swing high, which is a great sign for the stock. I think in the very short term, there could be a bounce till 170 levels, because the reason is there is a upward sloping trend line, and that's a resistance on the upside. So I'm expecting this bounce to continue till 170 and then again take resistance on that upward sloping trend line. For NMDC, again, 200 daily moving average support, high top, high bottom formation, previous swing low, previous swing high has been taken off. So I think a new short-term rally has just started for the stock. I'll be expecting the stock to go up till 70 to 60, and the next level would be 75. So these are the two short-term targets. I'll take a revisit on this stock again once it surpasses 75 levels. So yeah, a little positive on a few of the metal packs, but JSW Steel and Jindal Steel both are looking a little sideways to negative.
Okay, well, let's take a very quick break. Axis, of course, is at the session lows. The stock is lower by a good 5% as we speak right now. And the index is staying put with that 0.5% of a downtick. But it's been a roller coaster ride for the world, and yet Indian benchmarks have been fairly range bound and resilient. One can safely say that, despite record SIP flows every month, geopolitical tensions driven by Trump's tariffs, and fresh concerns over derivatives tradings as well, the Indian markets seem to be holding steady. Well, what's the way forward, and what are the next big themes, and will India's consumption boom sustain us through? Next week on Monday, we've got Swaroop Mohanty from Mirae Asset Investment Managers joining in. He's going to be donning the hat on ET Now and ET Now Swadesh as the guest editor to help our viewers navigate these uncertain times.
Hi there, welcome back to Closing Trades. We're tracking about the last half an hour trade off, and it's not been a good Friday so far for the street. A little bit of recovery, if you could call it that, is something that we're seeing on the street, but not much happening. Before we get an understanding of how the IT earnings season has been so far, Dilip, just want to get your sense on another sector that's managing to hold on well, and it has done well over the course of week, given there has been stock-specific news flow, and that's the entire real estate sector. What's your take on this sector? Because post-COVID, we've seen a massive boom. Then for quite some time, this sector has been very quiet, and it seems like some momentum could be returning. What do you pencil? What are you penciling in for the earnings when it comes to real estate? And do you believe that there is still some more upside left here?
Well, I think the best of the real estate run possibly is behind us, and that's what I would think. I think the real estate sector will continue to show a reasonable growth, with the kind of explosive growth that we saw in the last couple of years, especially led by the premium segment. I think now that is waning off, is what my understanding is, and the pain is there in the lower and the middle class real estate units. So I think all in all, what I would say is that real estate will continue to be steady, but whether it warrants a fresh investment, no, I don't think so. I would really wait and watch. And just as one of the pointers, if banking is not going to do all that great, is not doing all that great, IT is under the cloud. So I think a lot of this, the impact of that will be seen in the purchasing habits of some of these people who are the employees out over there. And that will get reflected in real estate, possibly in the urban areas of FMCG. So taking that as a cue, I would say that if I got some of the stocks in real estate, I would hold on. I wouldn't commit fresh in this particular sector.
So that's the take coming in on the real estate pack. But we have been talking about the IT space, and if we look at the numbers, it's sort of a mixed trend so far for the tech majors for the quarter gone by. Majorly, the companies have disappointed, but yes, of course, there have been some outliers too. So let's go across to my colleague Ashesha, who is here to get us with a roundup and the guidance that has been shared by the companies. Ashesha.
Well, yes, most large cap and several mid cap IT companies have now reported their numbers, and let's take a look at how they've performed versus each other. First up, let's talk about the constant currency revenue growth, where TCS reported a negative CC growth of 3.3%. We had all other companies also reporting, several other companies reported negative numbers. Remember, HCL Tech reported a positive CC growth of 0.8%, Tech Mahindra and Wipro at minus 1.4 and minus 2% respectively. Meanwhile, as far as EBIT margins are concerned, for TCS, they declined by about 30 basis points. For HCL Tech, we saw a decline of about 80 basis points. Meanwhile, Tech Mahindra reported a margin uptick of about 60 basis points. So that's the kind of move and constant currency growth and margin profile that we have seen for most of these IT companies. Now, shifting focus to some other parameters then, and deal win, that is also an important metric to watch out for. TCV growth for TCS came in at negative 23%. This was a major negative. HCL Tech reported a 40% drop in its TCV growth. We had Tech Mahindra and Wipro on the other side reporting positive TCV growth of about 1.3% and 26% respectively. As far as employee addition is concerned, HCL Tech and Tech Mahindra didn't report any employee addition. Nearly 5,000 employee addition is what we saw as far as TCS is concerned, although Wipro lost some of their employees in the quarter gone by. But what is crucial is the management commentary and the kind of guidance these managements have given. First up, Tech Mahindra, they said that they will exceed peer average in FY27. Some of positive commentary that came in from Tech Mahindra. HCL Tech meanwhile went ahead and cut their margin guidance. In fact, EBIT margin guidance has been cut to 17 to 18% for FY26. TCS said that FY26 is largely expected to be a better quarter for international markets. Meanwhile, Wipro, which reported its numbers yesterday, they said that the second half of this financial year is expected to be better than the first half, and they've given a constant currency revenue guidance of -1 to +1% on a sequential basis for the second quarter. So yes, it has largely been a mixed bag across companies in the IT sector, but commentary is something that will be keenly awaited.
Oh yes, that's that on IT. Pretty much most of the report card is out. But Dilip, not that the street was in any case going into IT earnings with high anticipation. Yes, there is a Wipro, which is a bit of a mixed bag. But I guess because of, the low expectations, Wipro managed to surprise on the upside. But do you think IT still remains an avoid?
Yes, certainly. I think in the absence of any great visibility over next couple of quarters, I think it's best to avoid IT for the time being. But not to forget, as I always mention, that most of these IT companies are very well-managed companies, and EBITDA to free cash conversion is very strong. And I think though their ROEs have been coming down, overall, I think on a overall parameter basis, corporate governance, they have been pretty good. So I will not buy at these levels, but maybe if it comes down further by about 10% overall, that would be quite a bit expecting. But still, I think I would look to buy at lower levels. And just to give a defense to the portfolio, not to get anything great proactive returns on that, but that is how I would position and play IT.
Today coming in on IT, but yes, Mr. Bhatt, would like to thank you for taking the time out and speaking with us. Really appreciate that.
Always a pleasure. Thank you so much.
All right, moving on then, and let's have a quick look to some of the newsmakers and rather some of the buzzers in trade right now. Well, of course, post-market, we will have the earnings coming in from Reliance, JSW Steel, and coming tomorrow, HDFC Bank and ICICI Bank. These counters are going to be in focus. But Vinay, the other pack that is actually doing very well today is actually some of these oil and gas related companies, and I can see that throughout the day, it's ONGC which is now seen to be the top gainer in the Nifty 50. Anything on the charts? Because after a while, we are seeing select PSU counters trying to make a comeback. Anything that is looking good to you with respect to the PSU pack and ONGC in particular?
Yeah, so ONGC definitely has broken out from the short-term consolidation, and if I were to compare it with the Oil India also looks attractive because our fundamental team has already recommended long to our clients, and this is the company which we like as compared to the ONGC. And technical setup is also relatively supporting because Oil India has been holding above the 50 days and 200 days moving average, and there has been a golden ratio movement in the Oil India where 50 days EMA has surpassed the 200 days EMA. So on every parameter, the company like Oil India looks very strong on the charts, and fundamentally also we are bullish on it. So according to us, the support is around 430, 435 range. So that is a strong base for the stock like Oil India. The next resistance for the stock is around 475. So yes, from this particular space, we like Oil India, and support lies around 430, 435 range.
Right, okay, let's also welcome on board Ajay Bagga then. Ajay, hi, good afternoon. Good to be speaking with you, and after a long gap, Ajay, how is it that you're maneuvering through these very uncertain times? Yes, we've got a domestic trigger finally in place and earnings is kick-started, but the global uncertainties remain. What's the best strategy right now for investors?
Thanks, Aisha. Thanks for having me again. Overall, if you see, we are in a tight range, and Indian markets have been subdued. We have been underperforming, and even if you look at today, we have US futures up. Europe is doing well. We saw Hong Kong and China close up, and Australia hit an all-time high. So nothing very wrong in the global scenario. We are actually not seeing the flows from the FPIs. That's one big reason, more because of our higher valuations and earnings being underwhelming. So the catalyst has to come domestically. I think the global issues are more or less getting sorted out. We will eventually walk into a 15 to 20% tariff deal with the US. That's baked into the markets, but there would be some relief there. We thought this year would be a more domestic sectors year. That is playing out, but bank NPAs going up has been one issue, and now we are waiting for the big banks to come in to really see. Shaktikant Das had called this out last year, and when he put some kind of brakes on the unsecured consumer lending. Now it seems to be rearing its head. We are hoping it's a one company kind of an issue and not industry-wide. That is what is spoiling the sentiment today for the banks, that how much of a morass is the unsecured consumer lending in. Remember, we have seen quite a bit of write-offs on the microfinance or the subprime book. So those have seen some cuts, those have got digested. These numbers are not really earth-shatteringly bad. It's a slight slippage happening on the unsecured consumer. But the issue is, how is the trend? What is the trajectory? And is it industry-wide? I think those are the big questions. And those will get answered over the next 2 weeks.
Mr. Baka, hi. I was reading something that you've recently written about the tariff impact that we're seeing play out in the US, and a trend that you have pointed out is de-inventorization. That's taking place in the US right now. It's affecting export-import players, the end consumers, and the entire retail basket. Do you believe a similar theme could play out here if we see a little bit more uncertainty with our deal with the US?
Is that the exporters are seeing the uncertainty, and even IT. IT, if you see, is correlated with the US macro. It's not correlated with the US rate cuts. There's a very low correlation. So IT moves when the US economy is doing well. Now, on the face of it, US economy had a negative print on GDP in the first quarter, but that was because they front-loaded the imports. So imports had a -3% drag that brought down their entire GDP. Second quarter, actually, the US economy is looking at a growth of 2.5 to 2.7%. That's why we are a bit surprised that our IT has not got better orders. Now,
I guess we have snapped that line with Mr. Bagga, but we'll try to fix that and get once again his take on the IT space and some of these export-related sectors. But meanwhile, let's shift focus to Greenlam Industries, as the company has announced that it is making an investment of 1,147 crore rupees in Andhra Pradesh to set up high-pressure laminate particle board manufacturing facility. Ashesha is here with more details on this one. Take it away, Ashesha.
Well, yes, Greenlam Industries is in focus as the government of Andhra Pradesh has approved setting up South India's largest laminate facility in Andhra Pradesh. Now, remember, this will be done with a total investment of about 1,147 odd crores, and the Andhra Pradesh government will also be providing some kind of incentive. They said that Andhra Pradesh government has approved incentives worth nearly 329 crores, which is nearly 30% of the total project cost. Now, as far as the capacity of this project is concerned, facility will produce nearly 7 million sheets of high pressure laminate per annum and about 2.9 lakh cubic meters of wood based particle board sheets per annum. So this is the kind of capacity this project will have in Andhra Pradesh. Now remember, Indian home decor market is huge and it is expected to grow going forward. In 2023, the total market size stood at about $33.5 billion. This is expected to rise to nearly $41 billion by 2028, implying a CAGR of over 4% over the next 4 to 5 years. Rising living standards and increased consumer expenditure on home decor items are the likely factors which will drive home decor market going forward. So yes, Greenlam Industries is in focus on the back of this 1180 crore capex announcement that has been announced, and Andhra Pradesh government will be providing nearly 30% of the total cost as incentives to the government.
Okay, so that's the take on that. And Natisha, thank you so much for joining us with the update on that stock. But let's get in some closing ideas from our technical experts. Vinay, you go first, and where are you placing your BTST trades for the day?
Yeah, so very few stocks are there which are doing well. So in this kind of market, FMCG is the space where we see some opportunity in the short-term trading side. So Nestle is the stock which has actually broke out yesterday from the consolidation, and the FMCG as a sector has been doing well. And whatever quarterly update has come, it has come out very positive. And after that, we have seen that most of the FMCG stocks rallied. So Nestle could extend its gains from here around 2468. One can go long. I would suggest a stop loss at 2420. On the higher side, I'm suggesting a target at 2550 for the trading for next 2-3 days. The second pick I would take from the another sector which is outperforming today is the metal. So from the metal, Jindal Steel and Power looks good to us, and that setup is quite nice. It seems that it is breaking out from the consolidation. So Jindal Steel, one can go long around 960. I would suggest a stop loss at 940 for the trading. On the higher side, I'm expecting a target of 999. So overall, FMCG and metal, these two sectors can do well in short term.
Right, interesting. That's the take coming in from Vinay. But Saumil, what about your stock strategies?
Hi, my first strategy is to sell Eternal, a short call on Eternal. Upward sloping trend line has broken on the downside, closing below 20 and 40 daily moving average. Negative setup for the stock. Momentum indicators are on the sell side. Stop loss would be 263, and the target should be 245. The second stock is IRCTC. Low top, low bottom formation, resistance at 200 daily moving average. Trading below 20 and 40, a negative setup again. Stop loss would be 781, target would be 745.
That will be interesting to see. Eternal, that's a short call coming in from Saumil. Let's watch out for that. But time now to slip into a very short break. Don't go anywhere. We'll be right back with more as we count down to the market. Stay tuned for more. We are just back after this quick break.
Market closing trades right here in ET now. While Axis Bank is still under pressure, take a look at ICICI Bank. That's the one which has actually sprung up quite nicely. In fact, it's sitting at the high point of the day. And remember, you've got ICICI Bank as well as HDFC Bank both reporting their numbers this weekend itself. So let me take it across to Varun and help understand what the street is penciling in for both ICICI Bank as well as HDFC Bank.
Well, we are expecting a single-digit growth for ICICI Bank. If you look in majority of the segments, we are expecting a slowdown. But yes, the overall growth will be better than industry. If you look at the overall loan growth, we are expecting the loan growth to be around 11 to 12%. The deposit growth is expected to be around 12 to 13% for ICICI Bank. And the overall CD ratio will also improve. The NII growth would be around 7.5%. We are expecting it to come at around 21,000 crores. The PPOP that is expected to grow by around 7.3%, and the overall profitability of ICICI Bank that is expected to grow by around 8.5% to around 12,000 crores. Now, if you look, the overall provision they are expected to be on the similar levels in the previous quarter, but the margins they are expected to decline on a quarter-on-quarter basis from 4.41%. They are expected to decline to around 4.2 to 4.3%. This would be impacted basically of the rate cuts that have happened in the previous quarters. Also, the overall cost ratios, they are expected to be under control. For ICICI Bank, the main thing would be to keep an eye on the net interest margin, how is the movement over there, and also improvement in the overall loan growth, improvement in the overall credit growth in the coming quarters. Well, we are expecting a quarter of slow growth for HDFC Bank. If you look at the overall credit growth in the banking system in quarter 1 of FY26, it was slow. It was in the single digit, and that is what was reflected in the quarterly update given by HDFC Bank, wherein the gross advances were up by around 6.7%, but the overall period end deposit, they were up by around 16.2%, and also the CASA deposit was up by around 8.5%, the time deposit were up by around 20.6%. On the basis of this, we are expecting the NII to grow by around 6% to 31,640 crores, the PPOP that will grow by around 9.3%, and the profitability that is expected to grow by around 7.4% to around 17,370 crores. Now, if you look at the overall cost ratios that would be under control, the NIMs that are expected to decline from around 3.46% to around 3.4%, and this is basically due to faster repricing of loans. The NPS are expected to be stable. The overall slippages are expected to be around 1.3% of loan. Now, because the deposit growth was better than the overall advances growth, so you might see some improvement in the overall CD ratio for the bank. The overall guidance on the credit growth, especially in the rest of the year, would be very interesting to know from HDFC Bank. But yes, this quarter is going to be a slow growth quarter for HDFC Bank also.
All right, thank you so much, Varun, for getting us all those details. But heading into the numbers, quite an interesting development on the stock price, because HDFC Bank is seeing a decline of over 1%, while ICICI Bank still clinching on that shade of green. But Mr. Bagga, you have already shared take on the banking sector, but with the earnings season in full swing, we have already seen that disappointment coming in from the IT pack. Help us understand that sectorally, any particular pocket that is looking good to you right now, where you are building hopes for a better number maybe?
I think cement, you will see good numbers. Rest is looking a bit disappointing. So the good news is most of it is in the price. So it has got factored in already. We don't expect major cuts in this market. Here on, the global situation is much better. One catalyst will be a deal, tariff deal coming through finally. That will be one catalyst. Second will be
snapping that line a little too often. But let me take it across to Saumil. And Saumil, highlight the charts of ICICI Bank for us ahead of the numbers over the weekend. You're seeing a sudden spurt up in the counter.
Yes, actually a little surprising. It has taken support at the lower end of the Bollinger Band, and it has spiked very surprisingly. It has a resistance of 20 and 40 daily moving average, which is around 1431. So I'll still wait for a breakout above that level. Overall, if you see, there is a big range forming for ICICI Bank between 1400 and 1450. So this 50-point range is where this counter is consolidating, and I'm expecting this consolidation to continue. Overall, if you see HDFC Bank, other banks are not looking that great, and ICICI Bank would remain in this range. So I'm a little negative on Bank Nifty as well, because it is trading below 20 daily moving average as well.
But while we're talking about some major earnings, all eyes are going to be on Reliance as well as Reliance Jio later today. Both of them expected to come out with their set, and in fact for Reliance we're expecting it to be a good quarter this time around, because the oil and gas conglomerate is expected to report good show, with profits expected to jump as much as 14%. Ashish is joining in to let us know and in fact highlight what we can expect from the earnings of both Reliance as well as Reliance Jio. Ashisha.
Well, yes, for Reliance Industries on a consolidated basis, we are expecting net revenue to come in at 2,45,700 crores, which will be a marginal drop of about 6% on a sequential basis. But on the flip side, on the bottom line, we are expecting an uptick. So EBITDA could surge by about 2%, and margins are expected at 18.3% versus 16.8% that the company had reported in the previous quarter. Now, as far as segment-wise performance is concerned, retail segment's EBITDA could decline by about 2%, but on the flip side, the other two segments, the oil to chemical segment and digital services segment, these segments are likely to report an uptick in EBITDA. Digital services EBITDA is likely to rise by about 4% QOQ. This is on account of telecom segment price hikes that the company had reported in the last quarter, and the entire benefit of this telecom price hike is likely to flow in this quarter. Meanwhile, as far as the other segments are concerned, Oil to chemical EBITDA could rise by about 5% QOQ, and this will be on account of higher margins in this quarter. Now remember, management commentary on the 75,000 crore investment in new energy that they had announced last year will be crucial. Management commentary with respect to retail segment store addition and telecom price hike will also be keenly awaited. Well, yes, we are expecting strong set of numbers for Reliance Jio this time around. We are expecting revenue at 31,100 crores, which will be an uptick of about 4% QOQ, and margins are likely to be largely steady at about that 53% mark. But remember, our average revenue per user is likely to rise by about 2 to 3 odd % QOQ. It came in at about 206 rupees last quarter, and that is expected to inch up higher to 210 rupees in the first quarter of FY26. As far as subscriber addition is concerned, that is likely to pick up pace. Remember, Reliance Jio added nearly 6.5 million subscribers in the last quarter. It is likely to add about 9 million subscribers in this quarter as well. But management commentary with respect to ARPU growth, tariff price hikes for the telecom sector and for Reliance Jio, and any commentary on subscriber addition will also be crucial. But all in all, strong set of numbers expected from Reliance Jio.
Okay, strong set of numbers, and that's something that the street is only going to react to come Monday morning. But Saumil, what's it looking like for the market? Do you think the range will get established a little bit lower come next week or not quite?
Yes, absolutely. I think we've already started. Nifty has already started making lower top, lower bottom. Last week on Thursday closed below a very crucial raise support at 25,330 and closing below 20 daily moving average. So that was the first sign of reversal, and we started forming lower top, low bottom. Today was the confirmation, closing below 40 daily moving average. All the major stocks like ICICI Bank was forming low tops, low bottom, but just spiked up. But HDFC Bank, Reliance, all of these stocks are looking a little negative. Bharti is looking a little negative. So large caps overall are looking negative. Some of the mid caps have started giving up the gains as well. Autos are looking a little negative. Hero MotoCorp has given up all the gains. So I think overall, in the very short term, the markets are looking negative, and I'll be expecting a 24,700, 24,500 levels in the short term. But the medium term still remains positive. So I'm not expecting markets to goes below 200 daily moving average, which is around 24,100, a little deeper. But overall, medium term still remains positive.
That's the near and medium term outlook on the markets, and not looking all that bad, at least in the medium term. Saumil, thanks so much for joining us and speaking to us at ET Now. On that note, we'll let you go. But viewers, only a couple of minutes left for closing for the day as well as for the weekend. Let's see what our closing rates are looking like as of now. Pressure continues to persist on the Nifty 50. You have 24,970 thereabouts. So still slightly under the 25,000 mark for the Nifty 50. A 138 point cut coming in on an intraday basis. In fact, if you take a look at what Nifty has done over the course of the week, this would mark Nifty's third consecutive week of decline, mainly dragged by names like Axis Bank and HCL Technologies, major earnings candidates this time, two numbers that have majorly disappointed the street. But once again, if you take a look at our performance today, sensex almost a 500 point cut, 0.6% lower, and below that 82,000 mark. So failing hold on over there is the sensex. Nifty Bank, a further cut is what we've seen, about 1% cut coming in. India VIX, a nominal spike up is what we've seen in today's trading session. The advanced decline ratio on the NSE remains in favor of the declines, and there's been no improvement. In fact, there's been a further slip towards the day's close. It's names like Wipro on the back of better than expected numbers in some metrics, Bajaj Finance, Tata Steel, ONGC, Nestle, Coal India, ICICI Bank that have continued to hold on to the green over the course of the day, even amid a largely consolidating market. On the flip side, pressure continues to persist for Axis Bank, almost 5.3% lower. Shriram Finance continues joins that list of losers along with BEL, HDFC Life, HDFC Bank, closing 1.5% lower. All eyes are going to be on HDFC Bank's numbers tomorrow, along with that bonus issue announcement, as well as ICICI Bank for their numbers. Reliance and Reliance Jio later today are going to be in focus as well. So those two counters will also be in focus. Sectorally, if you take a look at our intraday performance, it's only metal and nominally IT that have managed to hold on to the green. Its losses have been led by PSU banks, FMCG, energy, pharma, auto and realty. Over the course of of the week, however, the big winner continues to be Nifty Realty, PSU Banks, Auto, Pharma, FMCG and Metal, along with a slight gain on energy, and IT and Nifty Banks continue to be the top losers of the week. So that's what the market picture has been over the course of the trading day as well as the course of the week. We have closed above that 25,000 level. We'll give that rate some time to settle, but looks like we've closed above 24,950 for now. Nonetheless, a 0.6% cut coming in on the Nifty 50. But with that, we'll wrap it up on this edition of Closing Trades. From Shrishti, me and the team that put this show together, thanks so much for tuning in.